Welcome to my webinar. This is for basically the webinar for covering the end of June and also into July. We always do these webinars mid-month, and we sort of like to look ahead into the next month, really. So it's covering next sort of 4 to 6 weeks, I suppose, and see what sort of things that could be happening in markets, things that you need to be looking out for, and give you a few analysis of technical charts that some of the key markets that you would be looking out for. So let's get into this. Yeah, before we talk, this webinar is a live webinar, and also I'm going to be talking about live market information. So just be aware that this is just for informational purposes only, and it's not constituted as investment advice. So the factors. Sorry, the agenda that we're going to be talking about today are just sort of broad brushing the key events that are going to be affecting markets in the coming weeks. Then we're looking at the big macro picture, and then we're going to break it down into Forex, commodities, and indices. And towards the end, if you've got any questions, I will do my best to answer them, and hopefully you will get a good gauge of what I'm thinking about with regards to market moves throughout the webinar. But if I don't touch on anything or I need to explain it some more, please just ask me through the Q&A, and I will hopefully be able to think about that there. Also, just any questions you might have regarding your own trading strategy as well. So I'm at your disposal at the end of this webinar. Right. Okay. So before we look at the breakdown of the key asset classes that we always look at, the big events that we're looking out for in the coming weeks, we've got all the central banks announcing monetary policy, and central banks are always crucial for how foreign exchange markets move, and also commodities, especially regarding the Federal Reserve. But pretty much central banks and the outlook for central banks regarding monetary policy is going to be a theme of the coming months, because they're all now moving or beginning to move away from their ultra loose emergency monetary policy stance that they had back in 2020 when the COVID pandemic hit in February, March time. They're now starting to come to the end of that phase of monetary policy, and how markets perceive the movements of these central banks, certainly relative to one another, can have a key driver on foreign exchange pairs, especially. So, for example, when the Federal Reserve is expected to start to move away from this ultra loose emergency monetary policy, will be the point at which you start to see the dollar moving with more volatility. So that is why markets are so fixated on when the Federal Reserve are going to start to taper its emergency asset purchases. Tapering asset purchases means that they're reducing the number of asset purchases that they do on a monthly basis all the way down to zero. And that is the first step that the Federal Reserve will be taking with regards to tightening monetary policy. And it'll be in the coming months, it's going to be a really key question as to exactly when that starts to happen. And the June meeting, which is tomorrow, the June meeting is again not expected to see any real movement on that tapering of asset purchases for the Federal Reserve. However, little nuances and little hints in the monetary policy statement, potentially, and even the press conference, will be looked at or looked for by market participants and traders for an idea of whether we're going to start to see the tapering starting this year or even into next year. So we're starting to come into that zone. Now, if it doesn't happen today, it's definitely not going to happen in July, because if it doesn't happen tomorrow, it's definitely not going to happen in July's meeting. The June meeting for the Federal Reserve is one where they get all the staff projections going, they get the dot plots, and you get that every other meeting. So the meeting that they're having in the next day or so is an important meeting. However, if that doesn't contain any hints about reducing asset purchases, then it won't be in July. And the most likely time for them to start thinking about asset purchase reductions, and when they talk about it, in inverted commas, the taper talk, is going to be September. So it's unlikely to be in the June meeting. However, as I said, you can be surprised every now and again, but the Federal Reserve tends to be very good now at its guidance on monetary policy, verbal guidance, and communication regarding monetary policy. So we're expecting it to start to happen in September, and then for them to start the actual reduction, they're going to talk about it in September, and then likely to be the reduction in December. So how that compares to other central banks, such as, I mean, for example, the Bank of Canada has already started to reduce its asset purchases. That's one of the reasons why we're seeing the Canadian dollar outperforming on a consistent basis. Other central banks are starting to hint at it as well, and we're looking out for the likes of the Reserve Bank of New Zealand, possibly even the Reserve Bank of Australia in the coming meeting. Still a little bit too early for the Bank of England, whilst certainly regarding the European Central Bank, given its announcement last Thursday, they are going to be definitely lagging somewhat in its exit from its ultra-loose emergency monetary policy. So yeah, all these central banks are announcing, and you've got the dates there to look out for. Other factors we're looking out for also is the key question about inflation. Is inflation, and all this enormous inflationary data that we're getting regarding the US CPI, which is Consumer Price Index inflation, soaring to multi-year highs, as is the Producer Price Index, which is the PPI, or Factory Gate Inflation for the US. All these near-term signals are flashing red. However, they are basically, the reason that they are doing that is because they had a massive drop off a cliff back in 2020, and because of the weak comparatives, you see the data this year soaring higher. So let me just show you. Not that one. So let me just find it. That's the US inflation data that we have, and it's, as you can see, spiking higher. And that high of 5% on the CPI is, I think, 2013, and the core 3.8 is even further back. So really eye-watering numbers on inflation. But as the data for 2020 drops out, that inflationary number is expected to fall back, and it'll be interesting to see how that plays out through 2020, because already we're starting to see signs that these inflationary numbers are going to possibly moderate. But the question is, how quickly does that happen, and whether the consumer in the US feels that inflation is staying too high, and then they start to adjust their spending habits accordingly, and subsequently that would be negative for the US economy. So the Federal Reserve has a very important balancing act to play out there. Also, you've got fiscal spending. The US government has been spending trillions and trillions of dollars. Joe Biden is planning on a $6 trillion budget. And how that budget plays out in the coming months will be important, because can he get $6 trillion worth of spending through? The Congress is very tight on the voting, so it's unlikely he's going to be able to do that. The Republicans are going to vote those measures down, so subsequently that $6 trillion budget plan is going to be reduced as time goes on, likely. how is the COVID situation going to play out? Well, COVID obviously is hopefully, and I use this word with a big in inverted commas, hopefully on the decline, or at least because of the vaccine rollout that you're having, certainly in the US and European countries. Countries are starting to get their COVID under control, and obviously how much do the big major economies of the world help the emerging market economies as well with their vaccine rollouts is going to obviously be important, because at the moment the signs are that perhaps there is a bit of a COVID retreat in Asia because of the lack of rollout of the vaccine program. So there's still again a fine balancing act that needs to happen with regards to economic lockdowns, COVID vaccines, and obviously also the COVID infection rates taking hold as well. So there is still a lot of uncertainty around that, but the major economies of the US and European markets are starting to get through because of their vaccine rollouts. So they are starting to be able to reopen again, and that is still obviously a key factor. But for example, the UK has just been, its full reversal from the COVID lockdown has now been delayed another month. So there are still uncertainties surrounding that. But how does that play out with regards to currencies, especially, is the question. And finally, with regards to the G7 and the global tax on tech companies, yeah, I mean, it doesn't look, I only put that down because it was interesting, because it hasn't really done a great deal to stop the price rises of the tech giants in the US, especially at the moment. But something to think about if you're on MT5 and you're looking at share prices. So for all these central banks, who is on the path to tapering? Well, the Federal Reserve seems to be certainly later on in the year, and the question is, how does the ECB measure up against that? Well, again, the ECB has put another 3 months of front loading its asset purchases, so they've almost gone more dovish than perhaps some had anticipated, and I think that's going to affect the performance of the euro, maybe pulling the euro lower, so watch out for that. Bank of England is unlikely to taper yet. RBA possible, and other factors there. But yeah, the other interesting fact is that you get central bank speakers throughout the month. Certainly the Federal Reserve, Eurozone, UK are all closely watched for those central banks to provide clues on monetary policy, and yeah, how they progress their discussion with regards to tapering asset purchases is going to be key. Right, so I've already talked about inflation. So the question is, what is correlating in markets at the moment? So let's have a bit of a look. If I can find them. Got lots of charts going here. First question is real bond yields in the United States, which is this is real bond yields, which is 10-year Treasury yield minus inflation, basically. 10-year Treasury yield is at 1.5%. So if inflation is at 2.3%, then real yields in the US are minus 0.8, 0.9. So we can see that is an issue. Real yields going sideways is interesting, because sideways means that the correlation between the dollar and real yields is still pretty strongly positive, historically strongly positive. If for a dollar to perform well, real yields moving higher is dollar positive. So real yields going sideways means that the dollar is also going sideways, and we can see that through the dollar index. Dollar index is moving basically sideways now, and we can see, if I get the dollar index chart up, see here, it is actually over the recent month or so started to move sideways and broken this trend lower that it has been in. Now, the question, I suppose, surrounding that is what that means for Forex going forward. Well, it means probably ranging Forex markets on the major currency pairs. So I'll talk about that in a little bit, but certainly real yields going sideways is dollar neutral. Interestingly enough as well, real yields going sideways. The correlation between real yields and gold is also very strong, but strongly negative. So when real yields go down, that is gold positive. Basically, because gold is a zero yielding asset, it doesn't yield anything. So when the interest rates in the US are effectively falling, that is positive for gold. So what we've seen in the last, well, since March really, when real yields started to fall away, we saw that gold price rallied. Since then, it started to go sideways. And what have we seen? Gold price starting to fall back. If anything, probably into a ranging phase is my expectation, unless real yields go strongly higher. But I'll talk about that in a little bit as well. So a few correlations for you to think about there. Dollar, real yields, and gold. All have, they're the markets that I'm looking at the moment that are strongly correlated. So, Forex. Right, so as I said, if real yields are going sideways, then I think the dollar is going to go sideways in the coming month. And it would really play out that dollar index is a key function of that. You can trade dollar index on your MT4 and MT5, I believe, and definitely on MT5. And the dollar going sideways is affecting, I think, foreign exchange pairs, but also you can trade that on the dollar index chart as well. So this is the dollar index chart, and we see that it has started to at least find support. Whether it starts to rally or not is another matter entirely. I don't necessarily think it will, but you can trade, I think, the range. I mean, that's what I'd be looking at doing, trading the range, support around 96, sorry, around 90 big figure, but looking probably to sell, because I think ultimately dollar is still likely to come under pressure as the year progresses. But yeah, I still think there's potentially further downside in that dollar, but at the moment it's sort of moving in a range. Now, as I said earlier, the European Central Bank decided to continue with its accelerated asset purchases for the next 3 months, for the next quarter. And I think that that is going to be negative for the euro. So that is something that I'm looking out for. Euro negative to an extent. I'm also still thinking that Canadian dollar and sterling are positive. It'll be interesting to see how sterling is affected by the announcement that the UK is going to be pushing back its reopening, its full reopening for the next, for a couple of weeks, maybe 4 weeks. However, I'm not expecting that to have too much of a big impact on sterling. So I still think that sterling has potential for upside. Australian dollar could rally, certainly if the Reserve Bank of Australia starts to think about tapering and maybe even does it. I could see the Aussie dollar rallying. And interesting that the yen is a continued underperformer. Right, so let's show you those Forex. Major Forex. This is basically the performance against the dollar of all these currencies. You can see that it's been this center line here is the dollar neutral. So when it's above or moving higher, it's negative. It's positive for the currency, negative for the dollar. But you can see here, as we've sort of moved through the month, the dollar is starting to perform much better. So it's starting to rebound on the dollar. We can see all these currencies' performance against the dollar turning negative. Positive at the moment is the Swiss franc, interestingly enough. But equally, sterling had been positive throughout the last month, right until today. But also it'll be interesting to see how at the bottom here you've got the Australian dollar in yellow and the New Zealand dollar also in grey. Well, they are right at the bottom. Now, it looks as though that they are massively underperforming, but if I add in the performance of gold, gold was really strong up until the start of June, and now it's started to come back. Add in the performance of copper. Now, copper is also really started to fall away. Look at that, 6% down now in the last month, really performing negatively for copper. And finally, silver. You can see when I add in these commodities, gold here at the top, silver underneath that, and copper right at the bottom, you can see that the performance of the foreign exchange pairs against, the foreign exchange currencies against the dollar, it's actually not that much, is it? It's fairly neutral, isn't it? Ultimately, if you can consider it on that regard. But yeah, I think that is interesting. So we're sort of looking, I think, probably choppy ranges still on many of these foreign exchange pairs. I have a few trading ideas that I am looking at. Euro dollar cable, dollar CAD, and sterling yen, interestingly. Euro dollar, because I'm playing I think the range on euro dollar between 120 big figure to 122.60. Let's have a look at that. There's that dollar index again. Euro dollar, it just seems to be sliding slightly, but I don't think that that's going to continue too long. I think we're going to end up with the euro dollar just trading in a broad range, maybe down to 120 big figure, possibly. But I think ultimately in probably a 250 pip trading band, and I think you're going to get mixed signals in that in the coming weeks, because I don't really see that the dollar is going to be performing exceptionally strongly, but equally I think the euro is fairly muted as well. So subsequently, I think it's fairly much of a mixed outlook for the euro. I did also look for a trade looking to buy into support 140 to 141 on cable. Yeah, I think this is an interesting one. I still think that there is upside in cable. And look at this. Okay, let's go all the way back to the beginning. Not the beginning, but okay, back in May 2020. So that's over a year now, 13 months or so. Cable has been uptrending higher, or at least uptrending and moving to higher highs on a consistent basis. Not quite in a channel. You could argue there is a slight channel there, but ultimately it's just pretty much an uptrend. But it's a pretty decent uptrend. And if you zoom in here, I think that any pullback towards the 140 big figure, which was this green line here, that was a key breakout that became supportive. And I think any unwind towards that and the uptrend, I think, is a buying opportunity on cable. I think there is still upside to be seen. And I think this zone between sort of 41 big figure and 40 big figure, I think it's going to be an opportunity in the coming month, something that I'm looking out for anyway. The other one is dollar CAD. The Canadian dollar has been one of the best performers on the currencies for months and months and months. It's having a bit of a correction back just for now, which means that dollar CAD is actually moving higher. Let me just find my dollar CAD chart. Big downtrend channel, really consistent downtrend channel. But what I really like about dollar CAD is this momentum here. Look at the RSI. Every time it gets to 50 to 55, so sells off again, retests, and moves down towards the 30 level. Within this downtrend channel, you're looking at any rallies as a chance to sell. So let's zoom in slightly here. You can see there is a resistance coming in around the 22 big figure mark. Again, not far off hitting that today, as the market has rebounded in the last week or so, week and a half, 2 weeks. But essentially this rebound, I think, is just another selling opportunity. That 55-day moving average is a really good basis of resistance actually, and that comes in at 2270 area, obviously falling day by day. So I am just waiting for this little rally to play out, and then I'm going to be starting to look for new sell signals. This is the, you're still in a recovery phase. That 4-hour RSI is still above 50 fairly consistently now. Actually pulled back into support and rallied again today. So 121, what's that? 121.30 area of support initially on a near-term basis as this little recovery goes. However, I am going to be looking out for sell signals. Anything on the hourly chart? Yeah, nothing yet. So probably looking for the 4-hour chart to start to give me some signals. But I think that dollar CAD on the rebound, waiting for sell signals and then to pile back in. That's what I'm playing anyway on the short side. And finally, I was looking out for sterling yen. Sterling yen. Give me sterling yen. There it is. Now this is a cracking uptrend. As I said to you, sterling I still think is outperforming, and the yen seems to be underperforming. So you put all those two together, and that means that dollar yen is going higher. And you can see, sorry, this uptrend, really strong uptrend, strong momentum. Just unwound recently. Again, I zoom in here. It's unwound to breakout levels. Decent band of support there around the 153.45 area to 154.75. So 153.45 to 154.75, decent support band. Uptrend comes in at the moment 153.90. So pretty good band of support there. I still see that any unwinding move is a chance to buy, and that's what I'm looking for there. So going back to the slide, there are 4 trades that I'm looking out for there. Euro dollar range, looking to buy sterling in that 140 to 141 area. Dollar CAD, continue to play that big downtrend channel, so looking to sell into strength, and sterling yen as well, playing that continued uptrend. So on to commodities. I talked earlier about real yields, didn't I? And it means that real yields moving sideways tends to be dollar supportive, and subsequently we're starting to get ranges forming on these commodities. I wrote an article on the INFINOX website today that suggested that commodities are in a really interesting phase. They've lost their uptrends on gold, silver, copper, all lost their uptrends. However, they are still ranging for now. They haven't yet broken down in any real decisive manner, and I think that subsequently it's a really interesting moment for commodities. Oil is a different ball game. Oil, just the rally continues to run strongly higher on oil, but yeah, for now we're still looking at, I think, ranges at the moment on commodities rather than corrective moves. And I think for gold, we continue to play the range. Very happy to do that. Also silver, and I'll talk you through the oil price as well. So as I said, real yields moving sideways is dollar neutral. Dollar neutral means that you tend to see precious metals at least being neutral. So let's have a look at some of these precious metal charts. Okay, so yeah, you've seen this gold, right? Okay, let's go all the way back to that all-time high. The all-time high. What a move that was back in August 2020. And then since then we've been sort of falling over. But the recovery that we've seen since that March low has now broken this downtrend phase. So subsequently, the longer term outlook is neutral because you've broken that downtrend. But also now with this recovery uptrend also being neutral, it means that the nearer term outlook is also fairly neutral. So you're getting trend breaches on a long-term basis and a medium-term basis. And yeah, I think that ultimately that means that gold is probably going to be in a bit of a sideways phase. For now, it's looking a little bit corrective because you've had decisive negative candle on Friday, negative candle yesterday, and what looks to be a negative candle today. So 3 negative candles in a row. And they're 3 fairly big negative candles as well. When was the last time we saw that? Well, we haven't actually seen that throughout this recovery phase since March. Last time we saw that was when gold was corrective back in February, still corrective in February. So I think that what we could see is gold pulling back on a near-term basis, but probably back into a band of support. I think that the support between 1810 and 1835.40, I think is still going to hold. That was interesting that yesterday we had a spike down to 1845, which was this little breakout that we saw back in earlier May. So subsequently, I think that we could see that gold turning into a bit of a ranging phase. And the only thing that would, I think, mean that gold corrects more, I think, is if we start to see real yields going higher and the dollar rallying. So if the dollar rallies, gold is negative. We can see, I can find my chart. Gold versus yields. That's not the one I want. The one I want is gold versus the dollar. There you go. Correlation remains strongly negative. Average correlation of minus 0.38. So that's on a scale of up to -1 is perfect negative correlation. 0.38 is considered to be pretty strongly negative, certainly on an average basis. At the moment is 0.5, 0.6 negative. So you can see here that when gold, certainly since the turn of the year, when gold goes down, that tends to be coming as the dollar rallies. As the dollar rally peaked, we saw gold starting to rally again as the dollar fell over. And we're starting to see more of a pick up in the dollar. And lo and behold, gold is falling over. So the strong negative correlation between gold and the dollar is still very much there. So dollar rally would be gold negative. At the moment, as I said, dollar, I'm not sure is going to rally. It's certainly probably not going to rally that much. So we might see a little bit of further move down on gold if the dollar picks up a little bit. But I think that ultimately gold is probably going to stay above 1,800 bucks and find support 1810 to 1845, and then probably range up to 1,900 bucks again, and then chop around. That's my where I think gold probably is looking at the moment. So silver. I mean, you look at this chart, that goes back to July 2020, so that's not a million miles off 12 months. You can see that silver's gone nowhere in 12 months. That rally that we saw kicking in on gold, similar rally happened on silver. That low on the dollar, get that chart back again, which was that one. That rebound high on the dollar was late March, March 30th. And what was this date here? If I get the crosshair, 31st, 31st of or 30th of March was the day that silver bottomed. So again, silver is very much tied to the dollar price, and so the dollar falling over, silver positive, dollar now starting to range and move sideways, or even potentially picking up a little bit. And we've seen that rally on silver just falling over. So again, you get the outlook on the dollar right, and you can call the likes of gold, call the likes of silver with much more confidence. Doesn't work perfectly, I'll give you that. Doesn't work perfectly. However, with much more confidence, you are able to call these commodity markets. So silver starting to roll over a little bit. Ultimately, again, I see silver probably ranging, probably between that 26.50 to 27 bucks area of support, up towards the the resistance that we've seen consistently, 28 bucks up towards 28.75. We could well see silver ranging as a continuation of that move. So I'd be looking at buying around the bottom and selling around the resistance. Buying around the support that comes in around that 26.60, 27 figure area. And if you're trading near term, definitely trading near term up towards that resistance. Because you see here, the momentum of that rally has just rolled over, become a little bit more neutral. That RSI faltering around the 60 mark, never, when the RSI falters around 60, it tends to be when the market starts to form a trading range. 60 on the relative strength index, between 40 and 60 is ranging conditions. We could well see that. So if the RSI goes below 50, back towards the 40 area, I wouldn't necessarily take that as a negative. That would probably be because the market would be sort of falling back towards the support again. Briefly caught a glimpse of it earlier, but let's show you copper. Copper, anyone trading copper? Wow. Since March 2020, massive rally in copper. But that rally has started to turn corrective. I'll go in a couple of grades to, oh no, one too many. You do tend to see, though, copper correcting back. You just see this sort of blowout move and then a correction back. You quite often see that. The question is, how far does this corrective move go? In my report this morning, I mentioned this support band. We had the breakout support, which has now started to go below 435. You do not want to see copper going below 416, I would say, because these are the breakout levels, and you tend to see pullbacks coming into breakouts and then finding support and then going higher again if the trend remains strong. So I'd be looking at that support of 416 on copper and thinking that's pretty important. If it went below that, then you're thinking about sort of 380 to 390 area being tested, and then you really are turning corrective, especially considering copper was up at 480 odd. So yeah, this is it's an important moment for copper as well, coming back into this support. And one more look at the oil price. Oil price is incredible, actually. The dollar starting to find a bit of support. These commodities such as gold, silver, copper falling over. Copper, especially considering how copper is linked to the global economic recovery, I suppose. Oil price continues to move higher. Doesn't look like it's stopping at the moment either. I think I counted 14 out of 17 sessions where where the oil price has gone higher on Brent crude. So that's a pretty significant rally, and it's broken out, and that breakout is not really stopping. Although I would argue RSI at 70 on the RSI, looking a little bit stretched, although historically it has gone beyond 70 quite often in the bull run higher. So that's not necessarily going to stop oil at the moment, but is a warning signal that perhaps something may happen. However, I still think that it looks pretty strong, and I think if you saw a near-term unwind with that RSI at 70, unwind towards 60, if that were to be seen on the RSI, it's a pretty decent band of support, 72 down towards that 70 bucks mark, 70.40 to 72 figure. Pretty decent band of support there. All these old breakout levels, nice support there. If it found support in there, I'd say that's probably buying opportunity time. So that's oil. Okay, So we're through the commodities now. We're going to move on to indices. It's the thing with indices is that the asset purchases that we continue to have throughout the world is very bullish for equity indices. So subsequently, we see these uptrends continuing, and there had been corrective signals throughout May, and those corrective signals initially had a bit of a slip back lower, but ultimately it just produced another buying opportunity. Markets just do not want to sell equities at the moment, seemingly as though that any sort of weakness in equities is seen as a chance to buy. Nothing really is changing that. The only question would be, I suppose, what markets react like, how markets react when there is proper talk about the US Federal Reserve tapering asset purchases. Is that the point at which you get a taper tantrum? Is the question. We might see some corrective move in equities then, but at the moment there is no real reason why equities are not going to be continuing to at least buy into weakness and potentially move higher. The caveat I've got here is a more ranging US dollar and sideways yields could result in mixed moves on indices. That may well happen. That could happen, but at the moment it doesn't seem to be happening. And anytime you get any sort of slip back in indices, it's just bought into and the market just breaks out again. So the three indices, the main ones that we look at, S&P 500 futures, DAX and Ftse 100, all looking to buy into weakness, all seem to be supported by moving averages of various numbers, and yeah, it's all looking good. So let's have a look. S&P futures, again, big, strong uptrend channel. Doesn't really want to go down. You do occasionally get these sort of 2 or 3 week corrective moves. I mean, sometimes they're not even 2 or 3 weeks. But ultimately, they just get bought into again. That uptrend channel, you'd argue the 55-day moving average is a really good basis of support. On a near-term basis, you could argue the 21-day moving average is a reasonable basis of support. But anytime you get a corrective move, it seems to be bought into for the next leg higher. Little bit of a corrective move today. That's interesting. Again, it's just an unwind really at the moment. Back to breakout points. Question is, do you buy at this stage? I mean, I think ideally I'd be looking out for sort of 4,200 area, 4,000. You wouldn't want it to go underneath 4,167 area, 4,165, because then you're breaking the uptrend and you're also breaking that support as well. So move back to 4,200 if you saw it, and if that found support, I think that's buying opportunity time on the S&P 500 futures. DAX, once more, DAX a bit choppy through April and May. As I said, like these corrective signals that we were threatening didn't ever really get going. Just saw a near-term move to the downside. Again, a little bit of a choppy move, but since then, in moving late May into June, it seems as though the market's broken out and using the breakout levels as a basis of support. You've got the nice uptrend running higher. Again, the 55-day moving average is a good basis of support on the DAX. That comes in, get my crosshair, that comes in around the 5,350 area. And that's not a million miles off that uptrend, is it? And you can see how important and how strong that uptrend is over the last, or since beginning of 2021. It's been a great uptrend, actually. So, yeah, the DAX continues to buy into weakness, moving higher. I don't really see anything stopping that at the moment. The Eurozone is coming out of its lockdown. The business IFO data, the ZEW data for Germany is really strong, which suggests industry is recovering well. Survey data is good. Hard data is still yet to really pick up, but still, I think it all adds up to the DAX moving higher. And if the euro has a bit of a, let's say, a little bit of a negative time of it, or at least neutral, that's not going to hinder the DAX. If anything, that could help the DAX. So I still see DAX buying into weakness. And finally on Ftse 100, Ftse again lagging. Okay, let me just show you. Right, just I like my rebasing chart, so let me show you Ftse versus DAX versus S&P 500. Look at that. This is since the beginning of 2020. So what this chart shows you is the performance during the initial sort of month-long sell-off, huge sell-off that we did have on equities. Ftse 100 is still yet to get those losses back, still 4.9% down. But look at S&P 500, 31% higher than it was back in January 2020. DAX 18%. So DAX, Ftse, well, I mean, Ftse is a struggle. It's always been a struggle. I mean, it seems to be that Brexit is, or has been, the perennial factor that's a drag on Ftse. Still seems to be that Ftse is underperforming, but certainly the DAX and the S&P 500 futures, or the S&P 500, I should say, have performed exceptionally well. Ftse not so much, although it is trying, at least for once. It seems as though that it's trying to break higher. But yeah, you can see it's in this uptrend channel, looking okay, looking to break out again, has actually, or is breaking out, looking to close for a breakout above that resistance of 71.65. Again, look at that 21-day moving average, really decent basis of support actually. It's only had a couple of, well, you get these, I suppose, these intraday dips below, but on a closing basis, it's pretty good as a basis of support within that uptrend channel. Look at this RSI, consistently above 50. Any unwind towards 50, buying opportunity time. It seems to be that Ftse is still in recovery mode, even though its recovery is significantly lagging that of the DAX and the S&P 500. Right, okay. So that's all I was going to say today. If you've got any questions, please enter them into the question and answer box. As I said, now's the time to do it. Now's the time to ask me about any sort of trading strategy issues you might have, any instruments you're looking at, any markets you're wondering about. I can give my opinions on. And yeah, so if anyone has any questions, please feel free to ask me, and I will I'll give it a go. Hand up from John there. So John, if you'd like, if you've got a question, John, just put it into the Q&A section. Thank you very much.
Hi Richard, it's Cameron.
Hi.
While we're waiting for a few questions, I just thought I'd relay obviously the one-to-one sessions afterwards. They'll still be taking place. It will be a random pick after the webinar, so a member of the sales team will be in touch with any of the attendees either today or likely tomorrow to organise a time. So I just wanted to make sure that everyone was aware of that.
Okay, excellent. Okay, so question from Femi about Bitcoin. Any hints on cryptocurrency, especially Bitcoin? Well, Bitcoin. Where's my Bitcoin? Okay. I haven't actually got one set up, chart set up for Bitcoin. So Actually, I'll show you on there. This is my platform. So Bitcoin, here we go. Right. Well, a few issues that we have with Bitcoin. Right. Okay, we can't. Can you see that? Let's just make it better colors. Right. Okay, Bitcoin. You can see the rally that we've had in Bitcoin since March 2020. Massive, massive rally. But then it's retraced a lot of that rally already. Over 50% of that rally has been retraced. So the market, I think, could well now be in a phase of choppy. It's sort of been up and down in the last month or so. And I think it's probably going to be in that phase. It has also broken this long uptrend as well on Bitcoin. Although I mean, that's probably not the uptrend you want to be looking at. The major uptrend, I suppose, is probably this one here, although that for some reason is not at the bottom. So I mean, if that had a really big corrective move, you could see it at 18, but I don't think it's going to be going down there. Personally, I mean, I don't really cover Bitcoin on analysis. It's only really sort of for my own personal view. Personal view on Bitcoin, I think it's that it's likely that it's going to be bottoming around the $30 area, and it may well have now bottomed pretty much bang on $30. So I think that we've started to see a bit of a ranging phase on Bitcoin. We might see that limited around about the $42, $44 area, sorry, $44,000 area, down to maybe $30, and you might see it sort of chopping around there. Ultimately, I still see Bitcoin probably going higher. But yeah, with regards to the technicals, I think that there is reason to believe that I think it could be in a ranging phase. So just a big question from John. I think all the analysis you explain are all at the overbought region, and how does the RSI correspond with the uses on the charts? Is all the market not in a pulse region? I'm not sure what a pulse region is, so you might have to explain that. I think, does that mean just a range play, if that's the case? I think they're going to retrace deep before continuing. Are you talking, if you're talking about Bitcoin, then yeah, I think Bitcoin may well come back towards the $30,000 area again. Could quite easily do that. It's been very choppy in the last month. If you're talking about broader markets, John, then yeah, I just see that. I think that throughout the summer, you don't tend to see too much markets go into sort of a summer trading lull a little bit. You don't, and by that I mean reduced volumes, but also ranges form quite often during the summer months, and you could easily see that, especially through the Forex majors, with that dollar moving sideways now. I think that is the issue that you've got with the dollar moving sideways, and ultimately could impact on Forex pairs across the board moving sideways. So a comment from Alua. Good afternoon, sir. GBP JPY, we did look at that earlier on. If we look at the weekly chart, we see that it has hit that support area twice and is not and is currently ranging. Isn't there a possibility that of the price reversing into the resistance area as seen in the weekly chart? Okay, well let's do that. Let's have a quick look at GBP. So we see the weekly. Are you talking about this big resistance up around the 156 area being an issue? That could well be an issue. holding the market back. But if you look here, still in this uptrend, is a pretty good uptrend actually. You've had 2 weeks of corrective move, and then seemingly is now starting to build higher again. It's pretty good momentum, although you'd argue again possibly slight negative divergence on the RSI, where you get a higher high on the price but a lower high on the weekly RSI. So that could mean that hitting resistance might be an issue, although it's not confirmed. You do have this uptrend though, that I'm concentrating on that uptrend, I think, on the daily chart and weekly chart uptrend, and I think that's a pretty decent uptrend. And coming back to find support around the breakout level, I think was pretty important. And also from Alua, please, what app do you use to get more information concerning the economy of that particular currency's pair? Well, as I said, my outlook for, because there are two sides to a currency pair. There's the sterling side and the Japanese yen side. So if you have an opinion on sterling on its own and an opinion on Japanese yen on its own, you can bring those two together and you should be able to get a strategy for sterling yen. And my strategy or my outlook for sterling is positive. I think buying sterling into weakness, and my outlook for Japanese yen is relatively negative, although not massively negative. I think sort of neutral to slightly negative. So it should mean that sterling yen will be moving higher. It may be that sterling yen moves sideways for a little bit, but I think ultimately we're going to see further sterling gains in due course, and that's why I'm looking at that. So I hope that answers your question, Alua. Right, so unless there's anything else, it's pretty much coming up to the full hour. So as Cameron said, you're going to be contacted at random for one-on-one chats with me about your trading and your portfolios and all that. So something that you can get a little bit of personal time with me, so that we can hopefully iron out a few problems you might be having, or give you a few tips, and yeah, just something to help you along the way on your trading journey. So with that in mind, I will wish you good luck in your trading. Let me leave you with webinar in July. So come back then. It'll be mid-July is the aim there. And I'll leave you with the risk warning, and I'll speak to you all next time. Thank you very much.